In this video, I'm going to show you about indicator line definitions because I think it's important that you understand a little bit about these lines. Obviously, these lines are trade secrets, but there is some basic definitions that we can identify each line with, and this video will do that. There is a text sheet on it just for quick reference called Indicator Line Definitions, so you can go to that at any time you want. I've turned now here to that page on the website, and I have on the right side the zip chart. I'm going to be talking about these line indicators on the charts. The first one is the zip red, and you may have heard me, if you haven't been here first, you've heard me talk about how zip red is a leading directional indicator, or I'll just say leading indicator. And it also has divergence or divergent recognition, and it basically because of those two factors, it shows us, or can show us, what's going to happen in the next period or the next day. Zip gray tracks with zip red, and it is also a leading indicator, but in a little bit different way. And if I go down here to the chart, I'll show you what I mean. Where the vertical line is right now, you have, if you look at the zip red line, maybe a little bit tough to see there, but it's in a higher right leg pattern. And when you have a high right leg pattern, the next day is there's an extreme high probability that the next day will be a green candle, which it is. If I move this vertical line back to here, on this candle we have a zip red that is a low angle up, which indicates that the next day it's going to be down. Obviously the next day it gapped up, but likewise it also went down, just like the indicator has stipulated. If I move back to here, I was going to show you this as well. On this right leg W, if you didn't see it, the zip yellow, blue, and pink are also in right leg W's, and the more right leg W's you have, usually the better the influence it has on building a bigger candle. If you get enough of them, you'll see some decent gap ups. But also we have, as I mentioned, zip pink. Zip pink is a price barometer. It's both directional and locational. It closely follows the price. If the pink is down near 0, the price is going to go up. If the pink is up high near 100, the price is going to go down. Zip yellow and blue are volatility and momentum indicators mixed together in a way, and from that perspective, they're sensitive to what's going on, or what will be going on tomorrow. And when I say that, I think of daily charts, because I most of the time reference daily charts, and we're on a daily chart right now. The next chart I'm going to switch to is the power chart, and the power chart has, let me move this down here a little bit. The power chart, I'm going to start with the crossovers and positional cycle of both the power yellow and the power white. And I maybe easier to show you from this perspective. In this where the red line is, the red vertical line is, we have a peak, and both the or excuse me, let me stop. I wanted to talk about where the position of the yellow power yellow line was, and when it is up above 0, this happens to be, it's going down obviously. When it's riding up above 0, it has a tendency to climb. When it's below 0, it has a tendency to drop. When you can see by example here a little bit there. But that's generally what happens with it. The pink, the power pink and the power blue are deep cycle indicators, and they help identify the basic cycle to what you might be looking at. When you have, just like on where the vertical line is right now, when you have the pink and blue real high, you are on a peak. And likewise, when they go down low to the bottom, you are at a BOC, or the bottom of the cycle. The power Zion is it's a mixed indicator, but it has a type of volatility pressure to it. And the power red has, if you cross over 0, or if you cross over the power green or the power red, it tells you something. The red travels above 0 in an uptrend, and the red travels under 0 in a downtrend. And of course your power green and orange are your long-term, strong long-term red trend lines. Obviously when the green is above 0, you're in an uptrend, and vice versa. Moving on here to the trend chart. If I again pull this away for a second, the trend chart will show you those deep deep valleys and high peaks, and the trend red is basically a high pressure or low pressure indicator, and it may gap up when crossing 0. It also shows entry and exit points quite well. And the trend gray has leading response attributes to it, and it has divergence recognition. And by that, I'll show you it on starting where the red vertical line is. Trend red is up on a peak, and trend gray is also up on a peak. But this next day, now obviously we're not looking at the other 3 charts, but just the trend chart, but the trend gray goes down on this day, and you can see the trend line. You've got, and after this vertical red line, you have 4 green candles, and after this red vertical line, you also have the gray line dropping 4 times. Now that's divergence, and this is just one example of what the trend gray will do, but it does have divergent capabilities, or recognition, I guess is the way to say it, because unless you have those indicator lines to look at and to see that divergent response, and keep in mind too, when you see that divergent response, look at what happens when after the red goes down, up, down, down, up. And so on this, let me move it over here. On this day here, on that 4th green candle, you have the gray line has been going down for 5 days now, and the red line has bounced back and forth, but we're on a red peak at the moment again. But it closed here today at $129.69, and 2 days later, right here, it closed at $119.40. It had a $10 drop in 2 days. And you've heard my typical response. If you own 100 shares, then you made $1,000 bucks, and if you owned 1,000 shares, you made $10,000 bucks. So it's pretty significant in being able to recognize when these reversals occur. And spotting divergence is a real easy way to not only suspect something that's going to happen, but they oftentimes are really strong moves, just like that one there is. The last category I'm going to go over is the swing chart, and I'll open it up this way and just kind of show you when you follow the gray line, you can just see the peaks and the valleys of what happens. The swing gray is it basically locates deep cycle trends and identifies entry and exit points. And that's real logical when you look at it, but that's real powerful when you understand it. The swing red and green are obviously your long-term red lines, and you can see here if I write in here you can see here where the blue line is crossed under the red line, and over here where it's crossed under the green line. And as the blue follows underneath the green line, you're in a downtrend. And that's just, that's the way I have identified it on the sheets. I didn't read that on the trend when we were on the trend chart before, or on other charts before, I mean. But on the swing chart, when the blue is under the green, it's going down, and when the blue is above the red, it's going up. So sounds real simple, but some people can make it hard. But it's those lines are primarily for swing traders, because they can follow those lines and make a determination if they want to get in or out of a trade. Because I'm a day trader by definition. I think day one, when I started trading, mentally I was a day trader. But some people like to use or like to swing trade, and there's both of those aspects are in this system. The swing red identifies longer trends, as you know, and the one thing, swing Scion is it follows the price mostly. It's not exactly like Zip Pink, but it filters some trading issues. But it is swing Scion is a price follower. So that's the basic definitions of the line indicators. Like I said before, you can go to the text sheet for quick reference.